Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Rod Khleif, and I am thrilled you're here. And I know you're going to enjoy the hitter that we're talking to today. His name is James Kandasamy. James is actually a friend of mine. We have been threatening to do business together. I feel very highly about him, and I'm very excited to have him on the show. James, welcome, buddy.
Hey, thank you very much for having me on the show.
Absolutely. So let's talk about you. Let's talk about how this whole thing started. I know you started in single family. Talk about that and how you progressed to own 340 units worth over 25 million at this point.
Yeah, well, I'm an electrical engineer with an MBA, so I have a lot of analytical skills. A lot of times I overanalyze deals as well. At the same time, I know the business aspect of it, so I know how to buy properties and turn around properties. So started with a single family in 2013. Bought like around 15 single family. 13 of it was rentals and 2 were flips. And I
In
promised
San
not to
Antonio, right? Where you
in
live?
San Antonio. Yes, correct.
Okay. Mm-hmm.
So out of that 13 single families, 11 of it was rental and 6 of it was almost zero cash out of pocket. So the way we did that was basically we buy properties under market value, rehab them and refinance them and let it cash flow. So with that methodology, we almost built like almost 400,000 of equity. Cash and cash was above like 30 to 50%. And as I mentioned, 6 of the house was zero cash out of pocket. And then we moved on from single family to multifamily. We bought.
So did you use that 400,000 for equity in the multifamily? Is that what you're alluding to?
Absolutely. That's how we build our equity for multifamily, because in the beginning, multifamily is so huge, it's going to be hard to start without that equity.
Sure. And that's a great strategy, guys. Those of you listening that are doing single family, you flip, you find value add opportunities to single family, which is quite frankly quite a bit easier. And there's a lot more to choose from. And then you utilize that money to do, what James is going to explain here. So awesome.
Yep. So starting 2015, we start selling all our not all of it, there's 4 more. We still have 4 more. So we start selling multifamily. Currently owning 340 units. We are primarily focused on Class B and C. Currently focus is in San Antonio. We own like 3 large apartment complex. We started with 45 units and then moved on to 174 units. And the last one was 115 units.
So you sold your single family. I think you misstated. You said you sold your multifamily, but you sold your single family to buy the multifamily. And your first property, did you say was 54 units?
45 units.
45 units. Okay, can we dissect that deal? Do you mind if we drill down on that deal? Let's talk about how you found it, what you looked at when you found it, what sorts of characteristics it had, and then how you took it down.
Yeah, absolutely. I mean, when I first started looking for multifamily, everybody told me to go and work with brokers. But as you know, brokers usually doesn't talk to newbies, right? So I started my own marketing campaign to look for these off-market deals by working directly with sellers. So it was a lot of effort. It's probably 3 to 4 months of effort. And then after 6 months of working on that, I found my first.
Well, can you be more specific? Did you do mailers? Did you do outbound calls? What sorts of things did you do?
I did yellow letter marketing.
Yellow letters.
Yellow letters, yes.
Okay, that's, by the way, those of you that don't know what that is, that's a common thing in the single family space. You send these bright yellow letters that draw people's attention so they get read. And so you just mailed multifamily owners in San Antonio.
Yes, correct. I mean, of course, you have to do the upfront work of getting the sellers' information from companies like Listsource. We can get it from listsource.com. Once you get that, you have to get their contact and their information, such as the address and their phone numbers. And then you use skip tracing methodology to find their phone numbers. So you have 2 approaches, right? One is send them mails, at the same time you call them or you text them, right? So at one time I got a text from the sellers, hey, we want to talk about this deal. We have this 45 units in South San Antonio and we're interested in selling. It was an agent who works with the seller. So I bought it directly from the seller. We bought it at $35 a door at that time. And I hold it for 1 week. And I could never make the numbers work because I didn't know how to read the P&L properly. So I think it's very important for us to know how to dissect the P&L, because after 1 week, I was thinking to myself, because everybody else was buying at 50 a door, and why this 35 a door doesn't work. Then I realized I was adding all the capital expenditure into the net operating income calculation as well. So
okay.
Once I took that out, I realized, okay, now it makes sense, right?
So guys, let me stop you because there are people that won't know what you just said. Okay, so when you're doing your analysis, your cash on cash returns and evaluating, a profit and loss statement, any initial capital expenditures is not included in that calculation. I mean, that's you bring that into the deal as equity, as cash, but it doesn't come into play in regards to your returns. And so once you pulled that out, but you had calculated how much per door did you calculate in CapEx when you were analyzing?
It was a lot. I can't really remember. I think it came out to 50 a door. They had a lot of CapEx issues.
I'm sorry, 15?
I believe it was 50.
50.
Yeah.
50,000?
50,000 a door.
Holy cow.
If you add all the CapEx, yes. Yes.
That's I'm sorry. Okay, so 15,000 in CapEx. Mm-hmm. I thought so 50,000 a door total. I thought you were saying 50,000 in CapEx.
No.
All right, so even still, 15,000 a door for CapEx guys to go in and renovate a unit is the high end of the spectrum. Okay, most value add repurposing properties is, the average is probably in the $3,000 to $5,000 range. Correct. Now, I saw pictures that you posted about some of these before and afters that you did on a unit. You do a fantastic job turning around a unit. But okay, so you looked at it, and then you were paying $35 a door. You calculated 15 in CapEx, and then when you pulled that out and did the calculation properly, you were able to see.
What I mean in the CapEx is when I look at the P&L, because usually off-market deals is very hard, right? There's no broker in between. They don't do this nice, beautiful operating memorandum.
Right.
So you have to look at the P&L, and you should be able to dissect it from the P&L itself. So a lot of times the P&L is messed up by a lot of companies because there's no real standard way of doing the P&L. So in this case, the CapEx was mixed up with the operating expense. So,
I see. Previous CapEx was mixed in.
CapEx,
Got it. I thought it was what you were bringing in. Got it. Now I totally understand what you mean. Okay.
So I think it's very important. Okay.
By the way, let me just interject something, because again, this is going to be Greek to a lot of my listeners. So what he's saying is that the owner was expensing things that he shouldn't have been expensing. These were things that should have been depreciated over time, and so he was trying to have a bigger tax hit. Savings, but the IRS doesn't allow you to expense things that are major. That you have to depreciate them over time, and so that's why the numbers were skewed. Okay, fantastic. Okay.
So we can see directly from the P&L the property management was not doing a really good job. The expenses were like 67%.
Wow.
Income.
That's high. Typically, guys, the average is 50%. So whenever you see a high expense ratio like that, something's off, usually, unless the owner's paying utilities, which could be an opportunity to bill back. But okay, please continue.
So that's where I saw the opportunity, right? I mean, the rent was slightly lower than market, but it's not renovated. So I went in with a business plan of reducing expenses and doing rehab on each of the property. I think I spent like $3,000 per door.
Okay. So that's right in line with what I just said. Okay, got
correct.
it. Okay.
So we bought 35 and then did rehab. Within 12 months, we were able to cash out 110% out from that deal.
Fantastic.
So imagine that. We put in all the money and we took out all the money in 1 year, and we still own the building. So it's basically a no-cost basis.
That is the ultimate goal, guys. When you can do that, when you can get all your money back out or get your investors' money back out, and then it just becomes an annuity. That's why my show is called Lifetime Cash Flow, because that's how you do it right there. Awesome, James.
Yeah,
awesome.
I believe a lot in increasing the property value by adding or repositioning the property, right? So once you do that, you're able to refinance or cash out, and your cash and cash goes really up. In this case, it's infinite.
Well, sure. If there's no cash in, it's infinite. Yeah, that's the ultimate. That's where you want to get to. So I know you focus on value add deals. So what was your second deal?
Second deal was 174 units.
That's
This
a
is
big
called
one.
Boston Woods. Yeah, it's a big one. Yeah,
Mm-hmm.
we bought off market as well from the sellers.
How
Through
did you find it the same way, or did you do that through
we
a
found
broker?
it through the same way. It's crazy, right? People are selling
Wow.
174 units through. You'll be surprised on how much sellers want to sell out there, or how much sellers are underwater, just that they are not selling.
And so just you did mail, you actually picked up the phone and called people, you found their phone numbers, you actually called them?
Yeah. I tried two ways. One is two primary ways. One is texting them, and the other one's through yellow letter marketing.
Texting. Yeah, I've never heard that one. That's fantastic. Some people love that. I mean, they're not going to answer your phone call, but they're going to see your text. That's brilliant. Now, did you use a service for that, or did you hand type each one?
Oh, I found an app which can do a text blast.
Right. You can actually do a text blast, guys. And there's,
Yeah.
and this, I just did my boot camp last weekend, and Kevin Bupp, my good friend Kevin Bupp, that's in the mobile home park space, was talking about an app called Sly something. I think it might be like Sly Broadcast something, where you can actually leave a voicemail. The phone doesn't ring, and you can leave a voicemail. But that's brilliant. I mean, yeah, okay. So you found this one through text blasting as well. 174 units. Holy cow! I mean,
Yes.
you just wouldn't imagine that. Now, did you drill down when you did your preliminary work on your list of owners, your property owners? Did you like go to the Secretary of State, break down the entities, and find their home, the principal's information? Yes, okay, that's just what we do as well. Brilliant.
That's what we do. We go to Secretary of State and find who's the director of principal, and look for them, and then try to contact them directly.
Guys, this is doing what other people aren't willing to do. And this is why James is a huge success, because he's willing to do what other people aren't willing to do. Anytime you do that, you'll be a success. I had a couple of kids in my show. Kids, I shouldn't call them kids. They're in their late 20s, early 30s. But these guys have a couple of hundred units in Indianapolis, and they did the same thing. They call for rent ads and said, hey, are you interested in selling? Or they drive around, they see a rundown property, and they do whatever they can to find that owner. Go on Facebook, they talk to the tenants, they do it. Again, it's doing what other people aren't willing to do. So awesome.
Absolutely. I've decided that I'm going to overwork myself to find deals. And I think as a newbie, you have to do that. You have to overwork everybody else.
You have to outwork them, no question. You have to outwork them, no question.
Absolutely.
So 174 units, that's a big check. How did you pull that one off? Tell us about that deal.
So that was bought at $39 a door, and we put in a rehab of $8,000 a door.
That's a significant one. So
that's a huge rehab, but it has a lot of potential. Imagine we actually refinancing that deal in 12 months as well, which is next week. We are refinancing it for 115% cash out in 12 months.
Bam. Now tell us what you did for $8,000, just to give my listeners an idea of because I saw the pictures, but I'd love to have you describe what you did unit by unit that cost that kind of money.
Well, I mean, in general, we did, there was some structural issue, small foundation problem. It's not a lot. It's probably like 200,000 out of the 1.5 million that I spent on the property. There's exterior painting in general, yes, but interior is where we spend, because that's where you get the most bang for the buck, right? That's where I saw the
pictures, yeah. Mm-hmm.
Yeah, we spend almost 5.5, I think 5,000 a door to go put in stainless steel appliances, kitchen backsplash, new painting, crown molding. We really made it like a Class A property, even though it's more of a Class C plus neighborhood. But we want to be at the top, and we had the money, and we know there's a huge value. And
so crown molding, an appliance package, all stainless, countertop backsplashes. Did you put in any new cabinetry, new floors, anything like that?
No, not new cabinetry. New flooring, definitely, yes. And we only did 50% of the rehab right now. We are not done yet. Only 50% of the interior units are done. We still have 54% of units to be done, which means we still have a lot of value to be gained in this property.
Sure.
Right,
rents are going to go up every time you turn one of those units.
Exactly. And also we did a loan assumption when we bought this. So there was an option
with a supplemental loan behind it.
No. It was a loan. I know the equity is so much, right? So there was an option. Either I get a new loan, or I do a loan assumption and refi it in 1 or 2 years, right? Okay. So we know we want to build. I mean, I'm a person who want to do refinance and do a cash out as quickly as possible. right? Especially if it's a value add deal with a lot of equity. So
that loan that you assumed, must have had a few years on it, so there's not a high defeasance on it any longer.
there was like almost $500,000 defeasance, but keep in mind, we bought it at 6.9 million. We put in 1.5. It appraised at 13 million.
Holy!
I almost have like $5 million of equity stuck into this deal.
So you're going to pay that prepayment penalty and refinance it. Okay.
Absolutely.
By the way, guys, defeasance means prepayment penalty. And whenever you have agency debt, Fannie Mae or Freddie Mac, they have very stiff prepayment penalties. So James is going to eat that $500,000 prepayment because it just makes sense to put new permanent debt, get his cash out, repurpose the cash, and make it work. Now, let me ask you this. So you did a syndication and you raised the equity to be able to get to the loan amount and assume that loan. Was it Fannie or Freddie?
It was a Freddie Mac big
Freddie
balance
Mac.
loan. Yes.
Okay.
So what we did is, we had like 30 investors who raised, who are private investors. I raised money with them and bought this deal and turned around, and we're going to be paying back a huge chunk of their investment.
Oh, that's a sweetheart deal. Sweetheart deal. When you told me that per door cost, I knew the punchline was coming. That's fantastic. Yeah. So the third deal. Let's just
third deal is 115 units in San Antonio. It's nearby to my second deal. This was a property that was on the market. It went under contract probably 5 times and it fell through. And when I saw it, I said, it's a bit too small, because I went from 45 to 174. I always want to go bigger, but sometimes you find these sweetheart deals which comes just in front of you, right? So
you can't pass them up. I don't care what it is. Yeah.
So when this came through a broker, but it was sitting on the market for 2 months. And when I went to the broker, I said, "Hey, what's happening with this deal?" He said, "Oh, he hasn't found a buyer yet. It went and fall out of contract probably 3 to 5 times. I believe it's just 4 times it fall out of contract."
Wow.
Just because people are scared that there's not enough parking in this property. So it was like 115 units, but there's only like 120 parking. So nowadays, if you want,
you pretty much need 2 per unit. So that is a limitation. Okay.
Correct.
How did you get around that, or what did you do to make peace with that for yourself?
So so you always have to think about how to add value, right? So what I did was I looked at the property and I looked at what's surrounding the property. There was 2 plot of land beside the property. There was vacant land.
Perfect.
And hey, what about that land? Okay, then we go and track down who's the landowner, right? So the landowner gave us a price which we agreed to buy. It was I think 300,000. So we bought the property for 5.1 million. And the land was 300, so $5.4 million in overall. And we say, let's build the parking on the empty land and build a playground and dog park and walking trail.
Perfect.
That's a huge value add.
Perfect. Guys, in this business, we are problem solvers. James just solved the problem. 4 other people couldn't figure it out. And he just opened his eyes and his mind and figured it out. And that's how you become a success in this business, solving problems. Love that.
Absolutely. You always make money when you solve somebody else's problem, right? That's how you make money.
That. I love that. Well, let's shift gears for a minute, because I know you can add value to my listeners that are just getting started. Maybe they're in single family. They haven't done anything with multifamily yet. Maybe they haven't done anything. What advice would you give them?
I would say the few advice that I would say is, of course, if you think there's good deals out there, you're right. And if you think there's no good deals out there, you're right too. It's all on your mindset.
Love it.
And I can tell you there are tons of good deals out there.
As you say it, so shall it be. Whatever you believe is what you believe, and that's it. And there are absolutely deals out there.
Yes. Okay. Keep in mind, when I started in 2013 buying single family, people say there's no deals out there. And we found deals and we got 6 houses for free, right? And then when I started in 2015, it was really hot as well. Multifamily was really hot. Everybody was saying there's no deal. And we found a deal at 35 and we bought we got triple-digit return in 12 months. And even the last deal that I did, it's all going to be triple-digit. And this is all like last 2 years, right? So it's not 2010 or 2008 when everything's distressed. There was no money there. So it's all on your mindset. Second is, I would say everybody should learn property management. if you look at all the asset class of commercial, office, retail, industrial, self-storage, mobile home park, multifamily is a cash cow nowadays. But it's also a lot of people are missing out the point that the market is so booming right now. Property management has become less significant, right? But if you're really good at property management, you can turn around properties, you can manage properties, and you can find deals like nobody else can. Right. I know a lot of perception is like you buy a property, you do asset management, you give the property management to third-party company and you move on, right? You can do that, but I would say you need to learn the nitty-gritty of property management because there's a lot of money to be.
So you manage your own?
We manage our own. My wife and I, we have our own property management company. We have our own construction company, and we do asset management as well. So we do.
So you handle the turnovers.
Absolutely.
Do you have a general contractor that basically qualifies your construction company, or you don't actually have a need for it when you're doing the minor remodels?
General contractors is basically just for like painting and something with carpentry. That's where we use general contractors. But
got it.
Since we started from single family, we know a lot of contractors, which does roofing, which does painting. So all of them followed us to the multifamily. So.
Perfect.
Yeah. That's how we able to make.
So how did you learn the property management? Saying you must learn property management. Did you just study it? Did you hire a management company for a while and see what they're doing? How did you learn it?
We learned it through a mentoring group, and then that's how they teach us on the property management aspect of it. But once you learn, you can do it on your own, right?
Sure.
It's not very difficult, right? But the thing is, you need to learn it. Right, and you can give it to property management company.
Even if you're going to use one, because you're not going to know whether or not they're doing a great job unless you learn it. It's like anything else. If you rely on an expert and you don't know the business yourself, you're in a position where you can get taken advantage of. Would you agree with that?
Absolutely. Yeah. And keep in mind, whenever let me give you some example of bad property management experience.
Great.
Property management company, right? Since we buy direct from owners, we can see everything because the P&L is everything is open, right? There's no beautiful offering memorandum in front of us.
Right.
So when we bought the first property, the lights were turned on for 24/7 the whole year because they never take the sensor.
Wow.
Right. The water was leaking, right? And this is for 2 years. The water was leaking. So the water bill was huge, right? We brought down the water bill on my first property from $3,000 per month to
$3,000 a month from a water bill. Wow.
And
wow. That's staggeringly high. Wow.
From $3,000 a month in 45 units to $1,200 a month in 1 year.
Oh, that's fantastic.
So you have to put heart and soul, right? So the second deal was there's so much of delinquent renters, people who are not paying, and we have to let them go and get new tenants. So there's a lot of aspects to tenant management and turnovers that you need to know to turn around.
Sure. And when you're looking at a property, guys, just because the rent roll shows $20,000 a month, that may not be what the economic occupancy is. In other words, that may not be everybody who's paying. In fact, it may show that the units are occupied, and this is what you'd get if they were paying. But you've got to look at the financial statements and see who, the actual revenue that's coming in. Because in that situation, I'm sure there were occupants in those units that weren't paying that you had to get rid of, and they're late pays and probably big balances. Maybe they weren't aggressive in eviction, when people don't pay, and you kind of have to be because that builds and you get these huge back balances with your tenants that never get caught up.
Absolutely. You can buy a great deal at low price per door, but if you don't put good property management, it becomes an average deal. But if you buy a normal deal, but you put really good property management, it can become a really good deal. So I would say you have to know property management. The third thing is always try to look for deals yourself, especially when you're starting up as a newbie. I mean, don't think about networking with brokers in the beginning, right? Because most of the time brokers are not going to be talking to you.
They won't take you seriously.
No, the inventory is so low right now. Even experienced syndicators are finding it hard to find deals. And why they should talk to a newbie, there's limited time. They do not want to risk their commission, right? So always look for off-market deals Even smaller deals, start with that. Once you have credibility with that, then you can move on to much bigger property.
Okay. What do you think are good skill sets for a new investor to try to embody or align themselves with to be a success in this business?
I think, if they can follow the methodology of buy, reposition, rent, refinance, and repeat, right? Which basically either you always buy with potential upside. Don't buy the normal deals. Always buy deals where you can identify the upside and you have multiple exit strategy, right? So second is always either you be the first one to look at a deal or you be the last one to look at the deal. So my first two deals, I was the first one, right? Because the sellers didn't have anybody. I was talking to them alone, right? My third deal, I was the last one. After four guys looked at it and they have no choice. So you get a seller which is a bit more distressed. They are upset.
You're a little more motivated. They're a little disgusted. They've had four deals fall apart. That's motivated. That's awesome. Yeah. Okay.
I try to avoid buying properties which has been advertised, because most of the time, if you look at the deals, most of the deals has already been marketed to experienced syndicators. So if it's coming out to the market, most of the time it's not the best deal out there. You have to go and compete. You have to go to a bidding war on it, and you might win, but you may not have won the real price game, right? Because you might be the guy who's offering the top price for it.
Sure.
Right, so.
Okay. Tell us about, everybody thinks that this path to success is effortless and no problems, no setbacks, no hurdles, no noses getting bloodied. Tell us about a time or two then you got your nose bloodied and what happened and how you dealt with it.
I think on you're talking about the war story, right? So. The seminars, right?
Yeah, seminars, man. I've had big seminars. We all have, and that's like I said, I people look at this and think, oh, it's going to be effortless, and it is in a way, but you have to anticipate issues that are going to come up, and so I think people learn when they hear about other people's challenges, because I know you've had them. Everybody's had them. Can you share one or two that
I would say in the beginning when I started my single family is when I learned the most. We burned a lot of money. We wasted a lot of money. The contractors ran away. Everybody want to be a contractor. So that's where we learned a lot. We did wrong valuation, wrong appraisal, in the single family space. So, and also how to do tenant management. So we had a lot of learning in the single family side of it. But multifamily, we have been lucky until now. We are able to find really, really good deals. We're able to turn around. There's a lot of upside. So even though I make mistakes, I still have a lot of upside to.
Right. You can afford it. You can afford a mistake. And most mistakes are just a check. And if the checks coming in are huge, a few small checks going out are not a big deal. But you referenced mistakes with contractors. And guys, I want to flag that for you. Whenever you're dealing with a contractor, ideally get a referral from someone someone that's done business with them. Referrals are the best way to find the best contractors. Also, make sure your deal is buttoned down. You've clearly delineated what they're going to do. You've put in a time limit. You don't pay them too much in advance, if at all. If you can avoid it, try not to get ahead of them, and have a clause in there that if they don't deliver by a certain time, there's a dollar amount per day penalty if they're not finished. Anything you would add to that, James?
Yeah, absolutely. I think you want to, and also the tenant management, you have to know how to manage the tenants, right? Especially when you're not using a third-party property management company. But still, as an asset manager, as an syndicator, you have to know what's happening in terms of your property management company itself, right? So,
okay. Yeah, no, definitely agree.
So I think one of the strongest value proposition for multifamily, keep in mind, I started in the single family and I was making really good money. Who doesn't want 6-0 cash out of pocket single family? And I can keep on doing that, right? So I was doing a lot of analysis. I'm an engineer. So why we need to go to multifamily, right? So I have single family. I'm making really good money, but why multifamily? So the biggest value add in multifamily, which I see, is basically the ability to force appreciation. So if you look at the IRV triangle, are you familiar with that?
Oh, yeah. IRV, guys. So that's what you're talking about to calculate net operating income against cap rate against your valuation. It's a formula called IRV or IRV.
Right. It's called IRV triangle.
Right. It's the Irv triangle. The I is on top, the R is on the left, the V is on the right, and it's basically a mathematical calculations to calculate any one of the missing components in that triangle, be it the net operating income, the cap rate, or the purchase price / value. So if you have any two of the three, you can figure out the third. So please continue with your thought on that.
Correct. So if you look at the multifamily IRV triangle, I mean, this IRV triangle is across all commercial properties, right? So
Yes.
whenever you're able to find a property which is 10% below market rent, right? If you're able to increase your income by 10%, right, you are able to take out 25%. You're able to increase the value by 100%. Assuming the expense ratio is 50 to 55%. So that's a proven formula. So if
that's
you're
an exponential way to increase value, my friends. Okay, exponential, and that's what he's talking about here. It's staggering how you can force value on a multifamily property because it's commercial multifamily is valued based on a multiple of the net income, the net operating income, which is the I in that Irv formula. So please continue.
So correct. So whenever you're able to increase 10% of your income, you're able to take out 100% of the value goes up by 25%. And usually when we put down payment, it's 25% down payment, right? So basically you're able to take out 100% of your money out if you're able to find that kind of deal.
That's how you do it. That's how you do it. 10% increase in rents, and all things being equal, you can get your money back out of that deal. And that's such a simplistic way to look at it. That's a fantastic tip. And that's what's so exciting about this business, guys. I tell people when I'm on the phone with them, if you just a $50 rent increase on a 25 unit property is it's a $250,000 increase in value, all things being equal. I mean, it's just staggering what the impact of a small rent increase or improvement rather to the bottom line, be it a decrease in expenses or an increase in rents. So it's staggering the exponential impact of that. Fantastic.
Yeah, that's why the multifamily came out stronger in terms of my analysis between single family and multifamily. You're just able to force the appreciation. So if you're running like a business, if you're really good at turning around properties, you can make a lot of money in multifamily. Whereas in single family, you can do a lot of small deals, but the amount of work to do it and the value of single family depends on the comps around the area, right? So you can't really go above that. Whereas multifamily is just because of the income approach, just because of the NOI, you can increase the value and do a cash out refi or refinance. Yeah.
Now I know it's you and your wife. Do you have any other members on your team? I mean, have you aligned with any other people? Has it pretty much just been the two of you?
Right now it's two of us. So she handles the rehab and property management. I handle finding the deals and working with investors and investor relationships. So yeah.
Wow,
yeah, we have both of us have each strength, and she's really strong at property management and rehab management.
She's tough.
I'm not good at that.
She's a tough one. I'm a little scared to meet her now. She's tough if she handles that property management. Wow, that's awesome.
Yeah, she's really good at turning around properties. If you can see how we turn around within 12 months, how much we have increasing NOI by almost doubling it. It's a lot of work, and it needs a special. And my skills is finding deals and working with investors and analyzing deals. That's where my skills are. So we complement each other in.
Perfect. And guys, that's so critical. That's so critical in this business. If play to your strengths and align with someone that has your that's strong in your weaknesses, and those are the best partnerships you can have. And you're just blessed that it's your wife. That doesn't get any better than that.
Yes.
Some of the best teams I've seen are super analytical person with an outgoing person, or where you have complementing strengths, and that's the match made in heaven. That's if you get along and you respect each other, you trust each other, and you'll both have a great work ethic, it's a home run all the way.
And one thing is, if any of your listeners are working right now, I mean, go and take that project management training. Go and take that management training. All that will come very, very handy in the business world. I mean, turning around $1.5 million rehab in 12 months. You keep in mind, I basically used up $1.5 million in 12 months. And that is a big deal.
That is a big deal, guys, to manage that, to manage the turnover of the units, to manage the contractors, to keep the timelines in place, to make sure the sequencing's done right. So you don't put the floors in and then paint. You got to paint first so you're not getting paint on the floors. All that sequencing is critical. It's a lot. And the project management idea is a great tip for those of you that, want to, it's all about enhancing your skill sets. It's all about being the best you can be. And if you know these things like the property management, like the project management, and immerse yourself in this business, you're going to be a success because you're going to know what you're doing. You're not going to get taken advantage of, and you're not going to have huge seminars. You'll have little ones, everybody does, but you're not going to have the big ones. Yep. Great tip, James. Great tip.
And they can do it right now at their workplace as well. If they're working somewhere, they can always go and take all this management.
Sure. And you can build a huge portfolio on the side. You guys have heard me interview numerous people that have built multi-million-dollar portfolios on the side. You can get started in this, but you immerse yourself, you train, you push yourself, you figure out what it is you want and why you want it. So you're motivated, you do your goals and your whys, and then you stay up late, you get up early, you do whatever it takes to learn this business. And then if you're willing to do what other people aren't willing to do, like James did, to find these deals, your success is assured.
Yep, correct.
Thank you, brother. You've added a ton of value today. Is there anything that I haven't asked you that you'd like to expand on?
How do I give back?
How do you give back? Well, I'm going to put your contact information. I know you give back on the multifamily community that we set up on Facebook. And guys, if you are not in that group, multifamilycommunity.com is a direct link to that Facebook group. There's 5,500 people on there that are actively wanting to do this business. They're connecting all over the country. James has added value in that group, and there are a lot of hitters in that group. And also, like I've got my live event coming up in LA in April. So I was out there hunting for a hotel, and I met 5 people that I met with them. Tiffy and I met with them, my wife, that met on that group. And there's just these meetups and these alliances being made all over the country. So, get around people that are doing what you want to do. That's going to assure your success. And this last event that I just did in Tampa that was sold out, we spent a lot of time forcing people to network with each other and get to know each other so they can support, empower, and motivate each other. And it was very, very well received. So awesome. Well, James, thanks, brother. Thank you for your wisdom and sharing your knowledge. And we will have James's contact information. His website is achieveinvestmentgroup.com, and his contact information will be on the show notes. And just very grateful to have you on the show, buddy.
Thank you for having me.
Absolutely. Talk to you later.
Bye.
Thank you for listening to the Lifetime Cash Flow Through Real Estate Investing podcast. If you've enjoyed the show, please subscribe and then take a moment to visit iTunes and leave a 5-star rating and review. For more resources to connect with us further, please visit our website at lifetimecashflowpodcast.com. Tune in next week for our next show.